listen to this litany of woe about Costco. First, Bernstein's worried that the company may be approaching peak club counts, peak members per club, and peak revenue per member. Once Costco hits the saturation point, those numbers could start to deteriorate. Second, they mention a possible downturn catalyst, although they never really spell out what it is. And Costco does tend to thrive in a weaker economy. Third, potential competition. Finally, they argue Costco's expansion into China may not go as well as many people expect, or as the piece was titled, Cost, remember the symbol COSD, Cost, Rational Exuberance, Downgrading to Underperform on Valuation, U.S. Saturation, Competition, and a Slow Boat to China. Even worse, their bearish logic is all backed up by charts and graphs showing how Costco's stock is so expensive versus historical valuation on pretty much any metric you care to name. That sounds very rigorous and very scary. While the analyst freely admits that he missed the big rally in the stock, he does that right at the top. I thought that was very humble of him. Well, let's just say his logic sure looks compelling. There's just one teensy problem with this analysis. They make it sound as though Costco has very little control over its own destiny. And that's just not true. Costco is a best-of-breed retailer that has repeatedly reinvented itself. And if they need to reinvent themselves again, that's exactly what they'll do. As a close follower of the chain, I can remember when they initially decided that natural and organic was a fad. They didn't embrace it. Big mistake. And when management realized it, they went all in on natural and organic. They arguably have the best selection in the world now. I can remember when Costco failed to really embrace the internet. It seemed to me that they had contempt for digitalization, and they somehow believed that they wouldn't lose business to more digital-friendly competitors. They love brick and mortar. When they realized, though, they got it wrong, they pivoted hard, and they've become one of the best operators in the web. Some say the ultimate omni-channel retailer. The company's been judicious about raising the price of club memberships, but if they decide they need the money, I bet they could put through some substantial price increases without losing many customers at all. I don't want to say any customers, but many customers. Oh, and as far as the Chinese business is concerned, the slow boat to China. Costco recently opened a store in Shanghai, and it was so swamped with customers that there was barely room to push a cart. They actually had to close up early on the first day because they couldn't manage the huge crowds. Shoppers were literally fighting with each other over rotisserie chickens. Within days, management decided to put up a second one in Shanghai. That sure doesn't seem like a troubled, cannibalized business to me. How about you? So what do you do with a stock like this one? First, you have to accept that Costco's shares will never be cheap. That's why I always tell you to pay up for best of breed. Second, I think the Bernstein downgrade could prove to be spot on, at least for the moment. See, this stock is up 41% year to date. So theoretically, it's not such a bad idea to say, well, wait a second, maybe take a little profit here. I'd give it a day or two more to make sure all the weak hands get shaken out. After that, though, I have no doubt that Costco is worth buying into a weakness. The stock may look expensive now, but it looked expensive 5 years ago, too. And it's more than doubled since then.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.